The stock market is in a state of disbelief. Have you seen what investors are doing? In the case of Amazon, insiders are selling right now. We're going to break down what's happening right here, the different dynamics that we really haven't seen in the stock market for a while. I'm going to connect that in with what's going on in the economy and, of course, the investments that you could be making today, all here. You came here for the truth, so let me unveil that for you. I think it's important to look at what's going on in the market from multiple levels. And with that information, we're going to be able to make better decisions. So right here and now, you could see not trading places, but you can see that the stock market is getting Ozempic. The quick rise of GLP-1 weight loss drugs is set to drive a big shakeup in the stock market. And can you believe it right now? This has been the new trend. Investors, retail investors, are hopping on to weight loss drugs as the new, GME and AMC. Oh, they've become the hot pick today. And so we have seen so many investors popping in to these particular stocks, leaving the staples, leaving the companies that would be strong during these more these difficult times that we need more resilience. Instead, more risk is being taken. Okay, we also have this. Walmart says that users of the weight loss drugs are buying less food. I'm not sure if they can, really say that. However, the retailer used anonymized data on shopping patterns based on customers who pick up prescriptions and buy groceries at his stores. Is that enough information? You tell me. Do you think that this is the case? At least Walmart is using that data. I don't know if their customers know they're using that data. The point is, what do you think about this? Let me know in the comments. Let's have that discussion. We can reply to each other. Let's all get together, okay? We always do this in the Discord group, but on the comments, we got to do that as well. Markets have a fear of everything today. Call it pantophobia, and yet that hasn't fully manifested into a panic. And certainly the market, while it's off from its high, is still doing very well considering. Oh, we're going to go into a recession. We're at the highest interest rates we've been in years, and yet still. Why? Because like Pavlov's dog, we see that every time they ring that bell, you know what it means, that the stock market is going to go up as a result of the money printing. And so in anticipation of that event, which will happen at some point, investors are saying, I'd rather keep my money in here. But some are doing something else today, and it's this real balancing act. And I'll break that down a little bit further here. But you can see that definitely investors are fearful, but they're still investing. It's not as if they're putting their money under their mattress. Things have changed. Let's talk about it. All right. You could see basically just talking about the fact that while we do have these circumstances, there's optimism. It's here. Oh, yes. Well, Apple's iPhone is off to a disappointing start in China. Part of that, of course, because they are, dealing with their own issues right now. Although the most recent statistics, just before I recorded this video, I was looking at it where we have some numbers out of China that after all of the stimulus measures they have put in, it has resulted in some growth there. But in general, the average Chinese consumer has not been spending as much as they did previously. There's concerns about the real estate market. I mean, come on, we know that. And at the same time, maybe people are just not as interested in iPhones anymore that are these incremental upgrades. And in the US, you're going to be paying the highest price ever. So there's inflation even on iPhones, the highest price ever for a phone. Yes, it has titanium. That's a premium metal. But when you could bend it with your fingers, as if you might have seen that video, does it really matter if it's titanium? Because simply bending it. Okay. Anyway. All right. Now this comes out of Seeking Alpha. If you're interested in Seeking Alpha, the link is in the description. This is the premium. Amazon insiders are selling. Insider activities on Amazon stock are dominated by sellers. To me, the selling activities reflect fundamental changes in Amazon stock faces in the near future. The key challenge to include pressure on its operating margins, competition in key growth areas, and valuation. So the suggestion here is not necessarily that this is panic mode, sell, sell, sell. But the point here is that when investors are, the actual insiders and you see them selling, it dictates what absolutely could be happening here, and that it's probably not going to get better before it gets worse. And so how do we even do that? Like, how do we even know when insiders are selling? Well, I have a video about this in my playlists. If you go inside the playlists and you search for, literally it says like how to find when insiders are selling, something to this effect, in my course. That's you go to the Money GPS YouTube channel, you scroll down, you see the playlists, go to the e-course that's there, the easy e-course, and there's a bunch of videos. One of them says just that. Okay, it's one of the first videos, and you can find out for yourself exactly how to do this for all companies, any insiders you're looking for. You could see it. And it's interesting. In the case we saw not that long ago, I did a video where Tim Cook sold off. He was given $300 million worth, and he sold it the next day. So it tells you where the value is. Do you think Apple will be more valuable, Tim Cook, or do you want to take that 300 million and do who knows what with it? And he took that 300 million. Doesn't mean he sold all his stock, but we look at that and have to say, okay, because you would think he would want to put it in the place where it'd be valued the most. But if you're going to take $300 million and start to put it somewhere else, well, what does that tell you? You use your own judgment. Again, look, just take it with a grain of salt, all right? Because it doesn't mean they're all selling, panic selling, and so on. At least not in this case. SEC head warns that a financial crash caused by AI is nearly unavoidable. But what do we need? We need regulation. That's right. Let us come in because, we really did a great job on every previous crash. It's ridiculous. But anyway, that's the SEC. And I know nobody trusts this guy anyway. But what we tend to see is like little bits of a warning. Did you notice that? They kind of warn about this. And then like a year later, something really, I told you so. Kind of like, letting everybody know in advance. I don't know. I find it strange. Now, things could break. And so we want to be aware of that in advance. And one example that I want to talk about is what happened back in the 70s. And in particular, we need to talk about the resurgence of inflation. And so they discuss that here in this article. History indicates that the last mile of inflation is often the hardest. One of the key lessons of the 1970s was that inflation failed to return to its previous levels after the first oil shock of 1973 and U.S. recession of 73-75, and went even higher following a second oil shock in 1979. Now that inflation has become above target for the past 2 years, a fresh inflationary spike could well lead to expectations become unanchored. And you could see what happened right here in this particular chart. That's CPI inflation. What does this tell you? Well, right now today, we're getting shock after shock after shock after shock just in the oil market. And then you spread out and you start to look at these different potential events. This is a big concern today. So we watch carefully on oil, but of course, beyond that, there are any number of events that could pop off. Knowing that, we have to watch closely, because if they think that they're going to start cutting rates, and they do that, if they were to start cutting rates and some event happens and inflation goes up, they are going to need to bring interest rates up way higher than where they are today. That would absolutely crush the economy. What they want to do is print more money, and they want to do so at the fastest rate they've ever done in history. But if inflation starts to go up meaningfully, then we're in for a real treat. What do you think? Is this potential that we get a resurgence? A lot of people are saying, no, absolutely not. Well, you decide. Investors, whether it's retail investors, whether it's the pros, You could see right here for individuals what they're doing. Well, I bonds have become very popular. Series I bonds rate could top 5% in November. And I think it's important to look at any investment that's going to bring you 5% or more. We want that. We need that because we want to keep up with inflation. And certainly, inflation, depending on how you measure it, is a lot higher than that. But the point is, at least get something, right? All right, don't just leave it in some like random checking account to accumulate nothing. You could be putting in there month after month after month, and it rolls over quickly. A high interest savings account, even, a lot of these things are giving 5%. Earn more than 5% interest on your money. These are apparently the best high yield savings accounts for October of 2023. And you could look here, of course, I'll put it right here on the screen so you could see that. The whole point is it really depends on you and what you are trying to accomplish as an individual. Because for some people, it's all about wealth preservation. I got this, little nest egg, and I need to keep this, and I need to make sure that I hold on to this for the longest period of time. Other people might say, I've got a lot. I've saved. I've got multiple pieces of real estate. I got gold and silver. I've got my pension. I've got my 401k or RRSP or super. I am okay. I just need to make sure that nothing catastrophic happens, and so on and so forth. So it depends on those circumstances, whether you are going to be doing one thing or the other. There's never a one size fits all. Never. Don't believe that. Oh, this is the best thing. No, it's the best thing for you. The point is, and what we can do about this scenario is that we need to make sure that where we are putting our money, our savings, our cash, liquid, into something that will bring us a return. That return doesn't have to be overwhelming, but at least get something, because that inflation is just eating us since 2020. It's eating, and the potential that they'll go even further. Watch out. Okay. So that's the number one thing I believe right now that everybody must be doing. Yeah, you can get into the I bonds. There's a limit of 10,000 on I bonds, but look around and you will find these things. Okay. High interest savings accounts, money market funds, wherever. You're going to have a percentage of your portfolio that you want to be liquid, that you want to be able to, deploy at some point. But that doesn't mean you got to just leave it right there and not earn anything on it. You could do, lock in for 1 month in some cases. And, as you get that, you can just roll it over. Depending on, how you want to approach it. The point is, do not leave your money idle. Make it work for you. Even better, you could be putting that into an e-commerce business or something else where you're going to be able to multiply that, where, on any given month, you would be doubling your return on investment. But anyway, that's a whole different story. Right now, what I would highly advise everybody, if you want, what do I do? What stock do I get? Like, if this is the condition, what stock should I buy? Well, Seeking Alpha absolutely helps with that. And you could see just some of these examples right here. They give you the top rated stocks. If you're going to get into a stock, you got to know, number one, who's selling inside and out. You got to do that before you buy any stock. At the same time, you want to look, okay, what are the retail investors saying? What are the pros saying about this? What are the big boys, the Warren Buffetts and so on saying about this, if anything at all? What are the prospects of the sector? All of those things you need to understand before you pull the trigger. You don't just say, well, that YouTuber said, so I'm going to buy it. No. And so Seeking Alpha helps with that. There's a 7-day free trial in the description. I would highly recommend checking it out if you're interested in that sort of thing. Comment of the day. Imagine being able to, and thank you very much, Mark, for this. Imagine being able to create money out of thin air, buy back bonds that were created with the money that you created out of nothing in the first place. Seems legit. Yes, that's right. That's the world we live in today. My goodness, it's wild. Knowing this information, that really tells me that there are always going to go for more inflation. And as a result of that, we need to make the best decisions accordingly. If you appreciated this information, hit that thumbs up button. When you do, you're basically telling the algorithm, hey, this guy's good. So I do appreciate that very much. I want to see you tomorrow right here on the channel. Take care.